Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, November 4th, 5:13 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in a short-term pullback as defined by all the major moving averages being below their declining 21-day moving average, as you can see in the upper right here on the trend gauge. We use the medium term 50-day moving average, and that's still on green. However, the equal weight S&P and the Dow are below that level. All the major indexes above the long-term 200-day moving average. Reminder, the market never gets into serious trouble until the major indexes break their 200-day moving average. That's where all bear markets occur. We've got the yellow neutral signal out for market leaders as just about half of last week's 21 over 21 list bit the dust, but we are able pretty easy to rebuild it. Lots of candidates to go back in, but below the declining 21, we kind of back off the gas. So what happened today? Election, obviously, tomorrow, and NASDAQ 100 and S&P 500. S&P actually undercut and reclaimed the 50-day moving average. NASDAQ stuck between the declining 21 and the rising 50-day. We'll see what happens tomorrow. And then, of course, will we get results overnight Tuesday and into Wednesday? And then, even more importantly, how will we react to those? We are leaning toward putting a bit of a hedge on. Just we've got very nice gains over the past year since the follow through day, the first week of November 2023. No sense to give them back. We can still stay engaged and participate and easily take the hedge off if things return to. I like to say if things return to normal. Don't know if they ever will in this country in the world again, but what is normal, right? And then we've got the FOMC on Thursday, delayed. Normally, those are Wednesday decisions delayed by a day because of the election. And then, of course, we got to see how we react to that. The odds are basically 100% that we're going to have a quarter point cut on Thursday. Here are the numbers. 21 over 21 leaned bearish today, 13 down, 8 up, down an average of 0.61%. We'll go through the rebuilt 21 over 21 at the end of the video. The big 8 down an average of 0.8%. RG8s are 8 growth ETF composite, slightly positive on the day. S&P 500 opened flat, down, ended down 0.28%. Equal weight S&P slightly positive. NASDAQ 100 also opened flat, ended up down 0.29%. Equal weight NASDAQ slightly positive. Dow down 0.6. Change is coming to the Dow. NVIDIA replacing Intel and Sherwin-Williams. I don't recall which one they're replacing, but those are two that Sherwin-Williams will have 3 times the impact of what NVIDIA will have on a daily basis because it's the Dow Jones Industrial Average is a price-weighted index, and Sherwin-Williams trading at 3 times the price of NVIDIA. Don't ask me to explain it. It's weird, but it always kind of seems to move in sync with the S&P, slightly outperform when value stocks are in vogue, and underperform when tech is leading. But the Dow, anyway, down 0.6 today. Mid caps down 0.29. Russell 2000 small caps down, or sorry, not down, up 0.29 were mid caps, and the Russell 2000 led the way, up 0.4%. Global diversified 60/40 stock and bond up 0.1%. Global stocks flat. Global bonds prices rallied, so a little bit of a pullback in interest rates. Our flagship portfolio, GROTECTION, down 0.49%. Some of our leaders taking a bit of a rest today, but after hours, one of our positions up almost 20%. We'll talk about that when we get into the charts. So here's the S&P 500. As you can see, for the second day testing, the 50-day moving average slightly undercut it intraday, but got back above it. The declining 21 is coming into focus here and basically kind of forming a bit of a triangle. See which way we break with the expected volatility. Wouldn't be surprised if we break one way, end up going the other way. No predictions here on what the reaction is going to be, but I will say, if we call back to 2016, Hillary Clinton was heavily favored to win the presidency. Trump won. Overnight, the futures went limit down, and Carl Icahn famously came in buying tons of futures. Market realizing, hey, it might not be that bad with a business friendly president, and we opened up slightly down and had a nice rally after that 2016 election. So uh, the betting polls, most of them saying expecting Trump to win. You really don't know until the votes are counted, and then sometimes you don't even really know until afterwards. But we've got, as always, stops in place at Revere for everything that we own. Different levels get broken, we will decrease exposure. If they hold and we bounce, we've got a list of leaders to pick from. So there's the S&P 500, NASDAQ 100 looks very similar, declining 21, flat 50-day moving average. Here's the Dow Jones Industrial Average, breaking second in close below the 50-day in 3 days, back below that 42,000 level. Small caps, I'm sorry, mid caps, S&P 400 mid cap. You can see holding at that 3,100 level, but can't get back above the declining 50-day moving average. Sorry, declining 21-day moving average, uptrending 50-day moving average. So also looking kind of similar to the S&P and the NASDAQ 100. And finally, the Russell 2000 small cap index also trapped beneath those levels. Poked its head above the 21 today, couldn't hold it, holding the 2200 level to the bottom, which also corresponds to the 50-day moving average, and showing some relative strength over the past week as well. Let's go to the equal weight S&P. Three closes below the 50-day moving average now for this equal weighted index. Relative strength has been lagging for about 2 months. Those are the major indexes. Let's go to interasset correlation. We'll start off with the VIX. VIX up 0.46 today at 2198. Trading elevated up around this 23 level. We prefer to see it below 16 and ideally down around 11 or 12. That's when the market has done its best work over the past year. But no surprise that it's elevated with the uncertainties going on tied to the election and the FOMC, although that's really not that. The FOMC is considered to be a layup for 25 basis points and then another 25 basis point cut in December, and then two more before mid 2025 is what the market is pricing in right now. Let's go from the VIX to the dollar. A bit of a consolidation going on the dollar now, pulling back after a strong run up, consolidating for about 2 weeks now, bouncing at the 21-day moving average today. A change in character would be a break below the 21 on the dollar. How about precious metals? GLD, tight close against Friday, above the 21, down 0.14%. Gold stocks have been significantly weaker, now breaking the 50-day moving average. Silver sitting right below the 21-day moving average, and Bitcoin made an attempt at a breakout last week, 4 days down now, sitting right on the 21-day moving average. How about bonds? Bond prices up today across the board. Here's the broad bond index sitting right on the 200-day moving average. Long bond TLT up 1.55%. So it looks like setting up as a possible shakeout low on Friday's TLT price. That would mean a shakeout to the upside on the yield. You can see that there, pulled back 1.4% today, still really consolidating in this almost 3 week pattern. And the 10-year also consolidating. It was down today as well. Those are the major indexes. Let's go to the tail of the tape. Market state, as I said, short-term pullback. VIX closed. I did not update this at 2198. plus 0.5%. We've got this in red because it's elevated, obviously. 16 is kind of what we consider neutral, below 16, favorable. Let's see what else we got here. We're on the bear case with this sustained break below the 21-day moving average. He's coming into today is that pinch between the 21-day and the 50-day moving average, and we're still between those levels on the S&P and the Nasdaq 100. And hey, you might as well add mid caps and small caps into that as well. Day count had that one ugly day down last Thursday, 2-day consolidation since then. 4 days below the 8-day moving average and 3 days below the 21-day moving average leaves our expectations negative as long as we're below those levels. Let's go to the ATR. ATR is rising. We're still below one, which is we want it to be below one, but it is rising. We got as low as 0 points in the sevens, like 7, 8, I believe, ticking up now. That's why I've got a red arrow there. We prefer to see that falling. From a sector standpoint, oils, retail, basic materials, staples, and real estate strong today, along with bond prices. To the downside, yields, the dollar, semiconductors, banks, and utilities. Onto the portfolio. Stopped on Tesla. Um, Strange acting stock, very strong gap up and follow through before a reversal, and now multiple days down, but our stops all taken out of that position. We added Dell as the SMCI a comment made from Dell or sorry, from um, comment made from the video that they're looking more towards Dell versus SMCI with the accounting problems SMCI is having. We also trimmed VRT with a second close below the 21-day moving average and did some offensive trimming on A-Lab into its earnings report, booked about a 14% gain, up significantly more than that after hours. So we'll look to add that back. Bottom line on the day, S&P and the Nasdaq 100 hold the 50-day moving average. Mid and small caps outperform. The election tomorrow and the keys tomorrow remain where we are between this 21-day declining moving average and rising to flat 50-day moving average on the S&P and the Nasdaq 100. Let's get to the new 21 over 21 list for this week. We'll sort it by order of what was up on the day. These last about eight to nine names are all new. I'll point those out. We'll kind of go in order and you'll see the new names first. And if we got a flag next to it, it means we own it. Let's start off with some own. We're seeing a lot of gaps from last week that are just fading, but not Twilio. This made a day 3 higher high, 3 days above average volume. We want to see some kind of a pullback to get into this because this is very clearly a change in character. With this name, much less expensive with a PE in 24 than it used to be historical back when it traded at nosebleed levels. Celestica, another ad, gapped up on earnings, continuing higher this is exactly what you want to see is a move higher, a gentle pullback to the ADMA bounce and continue higher. Perfect earnings. They're a electronic product manufacturer for healthcare, industrial, and aerospace defense. Deckers, this is kind of what I mentioned with some gaps that are fading. This is actually just a pretty low volume handle being put in, bounced at the 50-day and regained the 21 today. So we'll give this one a shot in the retail area. XPO logistics firm gapped up on earnings, 3 days tight now since then. SFM, a carryover, gapped up on earnings, 2 days inside that range. This has been on the 21 over 21 list for an extremely long time. Another new entry, LNG, nice move up on earnings, pull back to the 8 and 21 and bounce. So we got a energy play in there that's not alternative energy, LNG, out of the oil and gas transportation pipeline group. NVIDIA pulling back, sitting right on the 21-day moving average. Kava sitting right on the 21 as well. We own those two. Guidewire really tight, sitting right on the 21. CART undercut reclaimed the 8-day today, our second largest position. VRT, 2 closes below the 21. Leaving this on because we still own it. But another move below there. This is why we took out a little bit of it today. It did show relative strength earlier in the day as far as gapping down and then coming back to positive. But I actually may need to replace this with two closes below the 21 if I want to strictly follow the rules, but we'll keep it in there for now. Dell, a little bit of a gap up and a negative reversal, but relative strength here confirming this recent move up. Carvana, massive move up on its earnings report, broke the low of the day, but right back to the 8-day moving average. Huge volume up on its earnings day. We'll give this one a shot to big earnings going forward, earnings estimates going forward into 2025. Toast, riding the 8 and 21 higher, has earnings later this week. Atlassian team, big gap up on earnings, held the bottom of the earnings gap range and bounced there today. And Roblox, another earnings winner, made a higher high today before reversing. The market did reverse or have some weakness in the afternoon, and this showing that as well. IBIT Bitcoin sitting right on the 21. SMR down today, but did hold the 21-day moving average. Very volatile name. This is small modular nuclear reactors. And MicroStrategy continues to pull back along with Bitcoin, but still above the 21-day. Reddit, big move up on earnings, day two higher high, pulling back on above average but lighter volume the past 2 days. Nothing wrong with this as of yet. Astera Labs, here's the one up 24% now. So we'll get a little bit of a pop on that. And for the portfolio tomorrow, obviously well received earnings report, challenging all-time highs from back in April after the IPO. And that's it. That'll be the 21 over 21 list for this week. May pull VRT out and put something in. We'll talk about that either Ted or Connor on tomorrow night's video. And that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Our flagship portfolio is named GROTECTION. Serves a dual purpose, that is grow assets. Rules based, grow assets means be in the market, in the indexes, in the leading names when the market is advancing. But we track it over 3 time frames. Sometimes the short-term time frame is weak and we'll pull back a little bit. Sometimes we break the medium term, 50-day moving average. That's this red line here. We back off even more, but we're going to stay engaged at least with the indexes as long as we're above this black line. That's the 200-day moving average. This is where the bear markets occur. As I've said, never get into serious trouble unless we break that level. And with that, I'll wrap it for Monday, November 4th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.